Everything you've been taught about a marketing budget is wrong. Percentage of income, fixed allocation, it's all garbage because the fact of the matter is you only need a budget if your marketing doesn't work. In this video, we're gonna cover everything you need to know about marketing budget. Like the only three numbers you need to keep track of: cash flow conversion cycles and how they can affect your paid advertising, and how to get access to an unlimited marketing budget even if you have no capital to invest right now. And make sure to pay close attention throughout the video because I'm going to be giving you free access to my paid ads tracking spreadsheet. In case we haven't met, my name is Daniel Schulte. I run a marketing agency that helps online service providers scale using paid ads. And what I'm about to share in this video isn't something that I learned through courses that I bought or books. It's actually what I learned in the trenches from growing my own business. And when I first started my marketing agency, we would get clients by cold calling and cold emailing. And the problem with that is that I did not get paid for how many people I called. I got paid for how many people I closed. So I quickly figured out that while sure, I was getting appointments through cold calling and cold emailing, I really wasn't able to get as many prospects booked on the calendar as I would have liked. So I quickly turned to figure out paid ads because instead of being bound to 100 or 200 dials per day, I was able to take that same exact pitch and get it in front of 150,000 people with the use of paid advertising. And once I figured that out, I was able to go from cold calling 95% of the time with 5% of my time being spent on actual appointments, closing deals, again, which is where the money's made, to once I switched over to paid ads, I was able to wake up with a calendar booked full of qualified sales appointments where I was able to hop on and close the deals. And if I didn't understand these metrics that I'm about to share with you in this video, then it wouldn't have been possible to acquire the clients through paid advertising and scale the way that I needed to in order to hit my agency goals. So with that being said, let's dive into the three numbers that I like to focus on for paid advertising. And this goes for me as well as the clients that I work with. So the numbers and the metrics that I like to keep track of is the client acquisition cost, right? How much does it actually cost to acquire a customer? Not a click, not a lead, but an actual paying customer, someone who has handed you money. The lifetime gross profit, which we'll go over here in a little bit, also forgot a parentheses in that, and the average order value, right? And so when I first started on advertising, I used to focus on getting the most traffic, which resulted in, the lowest cost per click, lowest cost per lead, lowest cost per milli, which is cost per 1,000 impressions. Because if you get more traffic, you get more sales, right? And that's what I thought until I heard Sam Ovens talk about how he would rather pay $1,000 per lead if it was guaranteed that 100% of them would convert into sales, versus paying $1 per lead if none of those leads converted into sales. And maybe you've done this before where you've sent thousands of clicks to a page and maybe you got a ton of traffic or a ton of eyeballs, but you didn't get any clients or customers as a result. So contrary to popular belief, not all of the traffic is created equal. And once I learned, that's when I clicked, because I had to focus on the only number that actually mattered for acquisition, which is how much it costs to acquire a customer, at least when you're running paid ads or you have, employees, etc. And if you've ever watched Shark Tank, that's why all of the investors always ask, so how much does it cost to get a customer, right? What's the CAC? How much are you investing to get someone to buy from you? And once I shifted my marketing to become CAC focused, it completely shifted my results and my clients' results, because I knew whether or not my ads were working, but I was also able to make sure that I could focus on the number that actually mattered and drives the results. And the way that you find the CAC is you just take how much you spent on ads and divide it by the number of customers that you got. So for example, if you spent $10,000 and got 10 clients, then your customer acquisition cost is $1,000. And of course, you can include other things like cost of goods sold, labor, etc., right? Commissions paid out to a sales rep, but just an advertising cost, right? This is how much it costs to acquire a client, which begs me to ask, are you able to outspend your competitors to acquire a customer? And let me explain with a quick example here. Let's imagine that there's two businesses in the same industry and niche, and it costs each of them $500 to acquire a client. Business A generates $1,000 per client, and let's say that they have someone fulfill the service for $400. So all in, they have $1,000 in revenue after the $500 in ad spend it took to get that client and the $400 in labor it took to service that client. They get $100 left over in their pocket. And yes, of course, there's going to be taxes and other stuff, but just for the simple math, let's use that for this example. Now, let's pretend that one day the ad costs double, which can happen between competitors coming into the market, right? Zuckerberg snapping his fingers and changing the algorithm. So now it costs $1,000 to acquire a client instead of that $500. And it still costs you $400 to get someone to fulfill that service. Well, now essentially you're going to be $400 in the hole for every $1,000 that you invest to get in a client, which is not going to be really easy to scale a business. It's going to become quite difficult if you're losing money. And let's say that business B generates $6,000 per client that they generate for the same industry, for virtually the same service, and they pay twice as much for someone to fulfill that service. Well, the $6,000 in revenue after the $1,000 in ad spend and $800 in labor, you're still left over with $4,200 in your pocket. Even when the ad cost doubles, you're still in the black because you've engineered your business to outlast, outspend, and outperform your competitors. Kind of like putting a Lamborghini against a Prius in a drag race or a pit bull against a Chihuahua in a dogfight. And no matter what you do to that Chihuahua or that Prius, they are not going to beat the pit bull and the Lamborghini. So let me ask, which business would you rather be in? Obviously business B. And if that's the case, then my recommendation is going to be to look at how to increase the lifetime gross profit for your business, which is revenue minus what it costs to fulfill, right? The cost of goods sold. In the case of service-based businesses, typically this is going to be your labor, right? If you have coaches or salespeople, or if you're a gym, that would be the trainer. Because with this number, you can figure out better ways to manipulate the business to outspend your competitors, whether there are storms or not. And especially when you and your competitors are selling the similar things with the same cost of goods sold. And when it comes to paid advertising, the costs are only going to go up over time as more people come into the market because of how low the barrier to entry is, how things are priced, etc. And so the final number that I learned to pay attention to was my average order value. So let's take that same example of the two businesses and let's pretend that doubling of ad spend, doubling of the cost did not happen. So it still costs about $500 to acquire that customer. Well, for business A, you got that $100 in your pocket. For business B, you got $4,700 in your pocket. And so let me ask you this. What happens if business A collects all $1,000 up front and business B charges $1,000 per month $100 per month for 60 months? Now which business can scale easier? Well, assuming both businesses are using their own money to grow and not venture capital, it's going to be business A, which brings us to cash flow conversion cycles. As defined by Investopedia, a cash flow conversion cycle is a metric that expresses the time that it takes for a company to convert its investment in inventory and other resources into cash flow from sales. If you're a service-based business, right, this might be how long it takes from the advertising from someone seeing that ad to actually hop on a sales call and then become a client, right? That would ideally be your cash flow conversion cycle. And not only is it important to know how long it takes to convert ad dollars in this case into sales, but it also pays to know when you break even. With business A, they break even in the first 30 days so they can immediately deploy that cash back into getting more customers and they can scale fast. With business B, it takes 13 months at $100 per month in order for them to break even, since it costs that $500 in ads and the $800 in the fulfillment cost, right? Is that $1,300. Which makes it extremely difficult to scale when you use paid ads, since either way, you're going to be going in the hole in the beginning. So how can you break even and profit faster? in the software world, for example, you can do the monthly option where you just pay the same subscription every single month, kind of like Netflix, or you can pay upfront for the entire year and you can get a discount. With this, for example, this is ClickFunnels, right? You can see that normally their basic plan is $147 a month. However, when you use an annual plan, they save you $240 per year. That allows them to collect the cash up front. Therefore, they can A, outspend their competitors to acquire a customer, but B, they can also deploy that cash quicker back into getting more customers, right? So they can eat up more of that market share. And I implemented this pricing strategy for my own agency. And when I did it, I immediately saw a jump in cash collected. So I was able to reinvest in ads and outspend a lot of my competitors who weren't able to do that same thing because they were collecting so little upfront. And this isn't the only strategy that you can use, but it's definitely one to consider. And ideally, if you use a few strategies so you can profit or at least break even in the first 30 days, then you no longer have a cash constraint on your business, which brings us to strategy number 3, how to have an unlimited advertising budget even if you have no cash to advertise. Disclaimer, this is not financial advice. However, this is a strategy that I've leveraged myself before. So there's a lot of credit cards out there that don't charge you interest if you pay the balance off before your payment date. And some of them even have like 0% for 24-month offers, stuff like that. I'm not sure the type of credit limit on those. It might be lower. So let's say you grab one of these cards and you use it to fund your advertising. So you're not using your own money in the bank, right? You're grabbing a credit card, applying obviously. And if you get approved, then you're able to use that credit card to pay for the ad spend. And let's say that you give Zuckerberg $5,000 for a Facebook ad over 2 weeks. And in that time frame, here are the example numbers, okay? So $5,000 in ad spend gives you $100 a leads at $50 a pop. 20% of those leads end up booking a call, which is 20 booked calls at $250 per booked call. And of those 20, let's say that 75% show and are qualified, because not everyone who books a call is qualified and not everyone who books a call ends up showing up to that call. So now you have 15 shows at $333 per show. Well, if you have a 20% close rate, you're going to be closing out of the 15 shows, 3 clients, which is going to cost you, I'm not sure what the number is off the top of my head, but if you charge $5,000 per client, then you're going to be making $15,000 in that 2-week time frame. Now, here's what's cool. You're able to pay off the $5,000 that you gave to Zuckerberg so you don't incur any interest on that credit card. It's kind of like a credit hacking almost. And now you have $10,000 that you can put back into your pocket or reinvest quicker back into the paid ads, or whatever you want to do with that profit that you made. And it's all without putting any of your own cash at risk. In fact, your cash never left your bank account because you leveraged the bank's money and not yours. And as long as you can at least break even in the first 30 days, then you don't have a cash constraint on your business because you can leverage credit and your cash flow conversion cycles to pay off the credit before it ever incurs any interest. And if you want to get a projection and plug in your own numbers, then you can steal my financial modeling template. Just plug in the numbers and it will spit out the data for you. You can see right here it has everything from amount spent, impressions, cost per 1,000 impressions, right? The click-through rate. And really it's just these numbers here that you have to change, and the cost per 1,000 impressions, and then everything else will auto-calculate for you. And if you're already running your own paid ads, then you want to be hyper aware of the important numbers like your CAC and your break-even timeline. And to the point earlier, right, it's not that the cost per lead and cost per booked call is not important. Those are lead indicators. However, it's super important to know the CAC, because if you get a ton of leads and no sales, right, then it's really hard to scale that without knowing the true number. So for that, you can grab my paid ads tracking sheet. It has everything from pretty much everything down the funnel: ad spend, impressions, the CPM, clicks, leads, everything top to bottom. And it'll auto calculate as well. as here at the bottom. It'll autofill all that in as you fill in this data here. So just click the link below and make a copy for yourself. And thanks for taking the time to check out the video. As a recap, we talked about the only 3 KPIs that you need to keep track of when running paid ads. We also talked about cash flow conversion cycles and how that can affect scaling your paid ads. And we also talked about how to get access to unlimited funding for paid ads, even if you don't have any money. Now, make sure to subscribe to the channel. Every week, I'm gonna be dropping more content to help you scale and grow your business using online advertising.